Hi, I'm Brett Tanner. I'm here to help you build wealth in a really simple way. When you think about real estate investing, there's really two ways to go about it. The first way is you could own the asset. We're all familiar with buying a single family rental house or a commercial building. It's really simple to understand ownership. The second way to invest in real estate is through lending. So the same person that's buying that house, that commercial building, is likely getting a loan. And on the investment side of real estate, those loans are typically from hard money or private lenders, anywhere from say 9 to 15% interest. Yeah, it's higher than normal banks because you're not gonna have to go through the full formal bank process to qualify for the loan. In fact, most hard money loans are based entirely on the asset and not on the individual, so your credit doesn't really apply. They're gonna have most likely higher down payments, and they're gonna have shorter term, but they can also close really, really quickly. So if you're looking at this as the investor side, actually becoming the bank and lending money to others, there's a few things you wanna think about. Number one, how well do you know the collateral? Do you fully understand the asset that they're buying? To fully understand it, I'd want 60 plus photos. I'd want to go on site, make sure the property's in the middle of a neighborhood. It isn't back to a commercial building or anything weird around it. You also want to make sure of crazy amounts of damage, holes in the roof, structural issues, and make sure that the asset itself is sound. Second thing you want to do is you got to know its value. You got to know what that home's worth exactly in the value that it's in right now. A lot of lenders will look at the after repair value. What will be worth when it's fixed up? The truth is I've foreclosed on a few houses over the years and I never got it back in fully fixed up condition. In fact, when I took a property back, I got it back in the exact condition that I originally lent on. So you've got to know what the property's worth exactly as it sits today. Lastly, the only question I'm really asked the borrower is, have they done this before? Do they have a budget and a plan and they actually have a way to get it done, or are they working with someone that does? So if you look at those things and you feel great on all of those, you might want to move forward. Another way to think about becoming the bank is I'm lending money typically at a price that I would love to own the asset at. In other words, if I'm lending at a price I love to own the asset, then the worst thing that happens is the borrower pays me as agreed. If they don't pay me, I get a chance to own that asset at a much lower price, which would help me have a better return on my money moving forward. So there are some pros and cons to hard money lending. The pros are it's very quiet. Once you do a loan, that borrower either pays or they don't. And typically, I tell you, out of the hundreds of loans I've done, overwhelmingly, they pay. Actually, the most annoying thing is when they pay off, so I gotta go find another borrower and place the money. On the con side of it, it's a shorter loan. So that loan might be only out for 3 to 6 months at a time. There could be some other logistics around insurance, servicing. There's a few considerations there. And you might have to have larger blocks of money if you're gonna do more than one at a time. Another advantage of hard money lending is scale. Because it's a quieter business, you're able to do a loan and spend your time focusing on another area. Right? Even if you're flipping the property yourself, you've always got to think, when I could be lending that money to someone else and still get that interest return, even though I don't get the additional profit. If you're interested more about becoming your own bank or learning how this could work for you, we actually built an entire course that's inside of Scale to Wealth. Click below and get the details on that. A lot of people think that the loan amounts have to be really, really high. I recently did a loan where a borrower put 50% down. They bought a home in the outskirts of Phoenix for about $150,000. They put 50% down, so I financed $75,000, which was about $650 per month. That's a 10% interest rate, and it was structured as a 6-month loan. Again, I'm very protected by the high down payment. The interest rate's good. It was lower because of the larger down payment. So I was able to offer them a lower rate, but my risk in this deal is almost nothing over the 6 months that I have the loan. So again, there's just two ways to invest in real estate. The ownership side and the lending side, paired together, both work really, really well. And if you want more content to have this discussion, we've got a free Facebook group, Be a Wealthy Agent. Go check it out. We'd love to see you in there.